All right, Karthik, let's start by introducing our audience to yourself and RentMoola.
Absolutely. Shrimana, thanks for having me on this call. I really appreciate this opportunity. So I'm Karthik Manimozhi. I'm the CEO of RentMoola. It's a Vancouver headquartered company. It's a FinTech. We are based out of Vancouver, but we serve global customers. Most importantly, we serve 400 cities here in North America. So we were founded in 2013, initially focused on solving the problem of collecting rents. There are obviously disparate ways of doing that, over cash over counters, checks, money orders, and so on. We were able to provide an online solution for it in 2013. However, the company and the business has grown significantly. Today, we support over 243-plus large property managers. And we have over 250,000 units under management, and we have been growing pretty aggressively through the years. Our net revenue is growing around 240% year over year. The key to that growth is really focusing heavily on two stakeholders. We have the landlords, and we have the renters. So the landlords essentially are looking for a platform, and everything for them is around risk mitigation and revenue lifecycle management. So they want a platform where they can reliably collect the rent on time, match forecast to collections, and so on and so forth. So we provide a variety of services to the landlords, everything from tenant screening, tenant application, ability to access insurance, and also a variety of reporting capabilities on the platform, and then allow them to collect 360-degree methods of payment. And we seamlessly integrate the payment information, both the charges as well as the actual payments, to reconcile them into their system of record. And we also offer things like tenant communication platform, as well as working capital and so on. On the tenant side, we provide a whole range of services, allowing them to do everything from search for the right apartment, submit an application, go through tenant screening, and get ahead of the application. In the U.S. in particular, we are working to provide security deposit alternatives, which has a big impact on the tenants. So instead of trying to put up 3 to 5 months rent in advance, they could actually buy a bond, which is as low as $200 per year, then allows them to cover the risk of security deposit instead of putting up cash. We provide rental insurance access and obviously 360-degree payments. And we also, in Q4, are unveiling a new solution where as part of the checkout, apart from using their bank accounts, their credit cards, debit cards, in-cash payments in 85,000 retail locations that we can automate on our platform, we also provide the option of a checkout credit. The way it works is they can actually select the charges with regards to the apartment, and at the time of checkout, they can access the credit. It's a 2-minute process on the platform. And if they don't qualify for the line of credit through our partners, we also have, prime, rates, micro loan program, which we'll be adding to the platform as well. So once the payments are done, we allow the renters to improve their credit scores by reporting their on-time rent and utility payments to the credit bureaus. That will allow them to, improve their credit score, and might come in handy, particularly for tenants in these desperate times. They can think about maybe upgrading to a larger apartment, or even think about becoming a first-time apartment or a homeowner. So we help them through that process. And last but not the least, we have a comprehensive tenant communication platform that not just allows for seamless communication between the landlord and the community of tenants. It also helps them with other things, like the landlord can advertise and promote local businesses, a very important aspect of supporting your local community and mom-and-pop establishments in your neighborhood. So all of that comes into play. So these are all features that we provide both to the tenant as well as the landlords. However, the real problem, I think, that we are solving is COVID has really created real issues. I think they're very structural, institutional issues. But COVID has certainly amplified the impact of those, and certain sections of the population are disproportionately affected by COVID than the others. And what we've seen happen since COVID is 3 waves hitting the rental market. So the wave 1, we actually saw that increased demand for automation. It's a no-brainer. The landlords could not staff their front offices. The renters required contact-free payments. So there was a real demand for online payment methods and so on. So wave one, fairly predictable, did happen. And in addition, landlords did not want to touch physical things like checks, money orders, and cash for the risk that they may carry pathogens. So it did really throw a lot of, wrinkles into the day-to-day operation. So we stepped in, so did some of our competitors and partners. The wave two happened around the April-May timeframe. So what we started to see is disrupted economic activity as a result of COVID. And what it resulted in is a high level of uncertainty, record unemployment rates, the government support in the U.S. coming in, but it was already on shaky ground, so there was a real fear how long the government would be able to support the renters, so there was real fear there. So people did what they normally do when they fear uncertainty, hold on to cash in their bank accounts. So we saw a 30 to 40% increase in renters using credit cards, debit cards, and any line of credit product to actually pay the rent. And then we passed through a few months, and COVID still is evolving situation in the rental market. And what we have seen happen the last couple of months is we've hit wave three, in my opinion, of the COVID. We're entering the cash cliff, definitely uncertainty around unemployment and government support checks coming in. Increasingly, renters are figuring out that when they use their credit cards to pay the rent and utilities, all they did was just kind of push the problem out 30 to 60 days out. So now they owe the rent, but they also owe it with interest on the credit cards. And last but not the least, the disrupted economic activity is continue to put a lot of pressure on the common households. So one of the features of wave two was, and wave one really, was landlords, the government, the lenders, they're all coming together and providing provisions for deferring your rent. So the renters did benefit by deferring their rent for a period of time, hoping to overcome the uncertainty. And the lenders gave the landlords a bit of a relief so that their mortgage payments were also kind of relieved for a little bit of time. However, what we are finding is that there is $21 billion plus in past due rent that needs to be collected, which puts significant pressure on the common American family households.
The $21 billion is on your platform, or is it the general global reported number?
It's the U.S. number.
U.S. number,
families
okay.
owe $21.5 billion in past due rent, mostly deferred rent, right?
How much on your platform?
So we do over 500 million processing on our platform, and we do over 500,000 transactions annually on the platform. So over the last 8 to 9 years, we have done billions in processing and millions in transactions.
But how much of past due rent is on your platform that you have direct visibility into?
Yeah, so that's a bit of a tricky question because it's there are some confidential data we can go into, but mostly what happens here is we are providing flexibility to the tenants. In some cases, they use their credit cards and debit cards to pay the rent. In some cases, we work on payment plans with the landlords and we get through it. So this, we have a big exposure in Canada compared to the U.S., so it's a tale of two countries really. So 30%, 35% of our install base is in the U.S., but it's rapidly expanding, and 65% in Canada. So vastly different stories on these two fronts.
So the Canadian story is much cleaner than the U.S. story?
I would think so. I think that there is a little bit more stability in terms of the government support in Canada. And traditionally, the Canadian renters, use pre-authorized debit and bank transfers more often than credit cards, as a little bit more conservative in my opinion. They do use online platforms. They're definitely tech savvy, but their choice of payments is more around savings and capital, bank accounts rather than taking on line of credit products. The U.S., I think that generally the population is more tuned to using credit cards. And a big part of that, apart from the cultural differences and the fiscal, approach to life, is also the fact that the credit cards here provide better cashback opportunities. So it's common practice to kind of pay, take advantage of the cashback and other solutions that the Visa, MasterCards, and others provide, and then make sure that you kind of fill the hole within the 30 days before the interest starts to hit. So there's some behavioral differences between the two markets for sure.
So, if I understand correctly, what's happening right now is both the mortgage companies are giving some help, some relief to the property owners, and the property owners are giving some relief to the renters, the tenants, and then you have all these other factors like credit card payment, deferred payments, part payments, and so on and so forth that are being facilitated in this market. How long is it sustainable? It's a pretty dire situation. It's in the U.S. and I guess you only play in the U.S. and Canada, but globally also it's a pretty dire situation right now. How long can this go on?
Yeah, it's a very valid question, Sharmana. I think it goes down to how the systems are set up and the institutions are set up. So even prior to COVID, 78% of Americans and 53% of Canadians were living paycheck to paycheck. So an unexpected $300, $400 spend would have thrown them into financial spin already.
Right.
COVID has tremendously amplified. And I can give you some data points. I think it's a very valid question. It's one that we all should think about. So last year alone, U.S. collected $500 billion plus in rent and utilities, and Canada collected $53 billion plus overall as a market in rent and utilities. There are an estimated 15 million renters, 43 million roughly in the U.S., 4 million in Canada. That's 1 in 3 households are renting, right? So you're right about some of the relief that came in, because it's a cash flow issue for the landlords. They usually collect the rent, and the rent kind of feeds the mortgages. Now, what's happened is the relief was mainly a wave 2 phenomenon. Where we are entering is that dire situation that you and I are worried about, because today, as we stand today, $21.5 billion is past due rent outstanding. And the conversation already has shifted to how do we secure that? Some of the states have passed, anti-eviction laws and so on, but even in places like California and around the country, landlords are allowed to proceed with eviction procedures, but there is a moratorium on evictions till January. This is scary, really, because an estimated 5 million renters in the U.S. have said that they are seeing difficulty in how they can afford the November rent. That's over 10% of the renters. And that is something that we need to keep in mind. The second issue here we have is that 63% of renters have taken drastic steps in the last 2 months. For example, they've dipped into their savings, or they've sold off their assets, or they have borrowed to keep up on rent. So this is very fickle, this environment. Now let's talk about the second part of the issue, which I think is going to put the population under tremendous strain. It is the fact that most of the lending and the borrowing opportunities, let's call it liquidity, which is very important for these families, are based on credit score. And credit score-based lending could take different forms: prime lending, subprime lending. Your prime lending can go up to 39.99%, subprime up to 99.99% interest. It kind of exposes a lot of these families. A lot of these families are now having to make tough decisions between feeding the kids, fixing their car, keeping a roof over their family. This is a very dramatic situation we are in. And then there are a record percentage of people who are either underbanked or outside the banking system. So that, I believe, is where we are. And this is where I think the institutions, FinTech such as us, have to consider, bringing in new solutions, and also maybe start questioning standard practices. How reliable is credit score in determining the credit worthiness of individuals? It is feared that 1 in 5 credit scores has a fault in it. We already know that credit score can discriminate against young immigrants and people who had a couple of bad incidents in their life, who are trying to put their life back together.
This one is. This incident, the COVID incident, is not for any fault of their own. This is really something. It's a market failure, and I guess the question is what happens after January, for instance, if the eviction moratorium expires. what happens then, because this COVID is not done. COVID is going to continue for a while longer, and the economic impact, stock market may be doing fine, but the real economic impact is pretty dire.
Yeah, it is. And I think you're going to find this is where that different people's fate take different route, because the renters are not a single monolithic group of people.
Right.
We're talking people who live in large cities versus small cities and small towns. We have people in different age groups. And increasingly, you have seniors, and it's a multi-generational population. You have people who live in Class A, Class B buildings, and then Class C, Class D buildings. There are people who rely on everything in a single place, like senior living. So there are different variants of this, and my fear is I think something's got to give here, and I foresee, just a prediction from my side, you would increasingly see local government activity, particularly in the U.S., to step up, because it's just shifting the problem right now. Because what happens if 40% of the American population are in a fear of eviction? I mean, that increases the strain on the local counties and states and cities trying to handle issues like homelessness and other things that come. So
absolutely.
What you're already finding, Srimana, is that the landlords are starting to have conversations around, how could we ease the pain? I mean, remember, in the past, particularly if you are in a Class A city, as a landlord, you were in command of the situation. You had record rents. You had record level, almost zero vacancy, most of these pieces. And even today, when the evictions happen, they will be able to refill those apartments quickly, but that's a very inhumane solution, really. So I think what we're finding is that the landlords, and they're also, we should also be sympathetic to them, because they're not just one class of people. There are corporates, there are holdings with a lot of access to liquidity, but the bane of small businesses and families in most of the world today is income inequality, access to proper credit sources. So most of the time, all they need is a lifeline, and that is liquidity to overcome that adversity. And that's the difference between the Fortune 5,000 companies and most of the other companies, is that access to that capital, the chance to kind of redo, right, the second chance at things. That's where they struggle. So what we're finding is the landlords are interested to figure out, what about payment plans? How do we work with the renters? I definitely predict that increasingly the local counties will work with us and others to figure it out. And for that reason, we are unveiling our Q4 program as well through our partnerships, where it's data-based lending. It's not just prime, subprime. You will see an explosion in alternate lending. We already have companies like Tala, who do a phenomenal job out of Santa Monica, hugely influential in developing countries in Latin America, India, and Africa. Tala is just one example, where they use data other than the credit score to determine the credit worthiness of people. So I think you will see an explosion and a complete rethink of how we determine people's intent and capability to borrow and repay debt. And that is inevitable. That will happen. And that's one of the solutions that we are packing into our platform today. We hope to go live in Q4. We have some final stages. We're working through our partnerships. But the idea there is checkout flexibility. So the time of checkout, you can borrow a revolving line of credit that is based on your data and financial history, uses credit score, but only as one of the parameters. And you're able to get a revolving line of credit for low or no interest. So that's one of the things we are looking at. But I think it's going to just take one company. It's got to be a movement, grassroots, grounds up. And that, I believe, creates big opportunities for data-based evaluation and, data-based way of creating additional liquidity in the market. Something's got to give here, Srimana. I don't think the business as usual is going to cut it.
So I have several questions as I'm listening to you. And I think the questions are different for different segments of your tenant base, let's say. So there is one category that has jobs, right? Even through this, there is even in the blue-collar sector, some segments are still doing well, right? The delivery workers, the essential workers, they have jobs. There may in some cases, there are companies like Walmart and so forth. They use these new FinTech solutions like PayActive and Earning for payday, like advances on their pay, the workers' pay. Are you familiar with this trend?
Yeah, payday lending.
So these guys are, it's not payday lending so much. It's more like, these companies these employees get to borrow against their paycheck, basically gets, before the paycheck is due, they can get advance payment and stuff like that. So there's a bit of a, guarantee that, okay, these guys have jobs, these companies are not laying off, and so, payment terms and stuff, you can factor these kinds of things into, and that's one segment. This is the segment that does have jobs, and the jobs are most likely are in relatively stable sectors. Like delivery workers are doing well because delivery workers have become essential workers. That's just an example. There are other categories like that. But then there is a category that is really, completely zapped, right? These guys are really in a dire situation. They don't have jobs, and it will take a while for the economy to recover and them to get back on their feet. So they probably need some solution for the next 12 to 18 months while the economy gets back on its feet. What happens to them? Do you have any solution for them?
Yeah, I think generally what we're seeing here is multiple layers of reality. For example, there is definitely a population who are employed versus a set of population who have been really made redundant. Airlines and other industries come to mind, right? And it's a very valid point. But it's also a factor of, going back to what is the type of pay that they're making and what is the burden of rent. Like the golden rule is that you don't spend more than 30% of your pre-tax income on rent. But in larger cities, we have seen that those numbers are easily around 50% pre-tax income on rent. So we are seeing a financial crisis intermingled with a health crisis. It is very, very muddled, the picture right now. So you're going to find, the whole topic of, income inequality comes into play as well. You can be working jobs, but does that, what is your free cash? And does that free cash, support your rent and your other utilities and other payments? And, rent is just one of the primary needs. Food is another.
Right.
Healthcare is another. So whichever way you slice and dice it, you are going to find, a tale of different fates depending on people's demographics, their cities that they live in, and so on. So we as a platform, what we try to do is provide some level of flexibility. There is no silver bullet to the situation. It's going to require the whole village to work towards the betterment of the community. And maybe it's also time to look at some of the systemic things and so on. In many cases, the whole framework is working as designed. The problem is it's leaving too many people outside of the framework because of the record number of underbanked and people outside the banking system. So what we are looking at is our range of landlord portfolio goes from affordable housing, where we probably expect a lot more support from local counties and governments stepping in. And they also have a responsibility to protect the renters from falling prey to predatory lending practices. Let's not forget that, because oftentimes these lenders may blur the line between principal and interest and might set up a no-win situation for these already hurting families. So that's one thing we have to take care of. And then you're also finding a mass migration in some cities like San Francisco with the option to work from home. So many people, for the very first time, have decided to leave these large cities to go back to their families and cut down on payments. So one of the ways this reflects in our platform is that for the first time, Class A cities in Vancouver, Toronto, San Francisco, California, New York, there is increasing ads for marketing vacancies. We're seeing that happen as well. I mean, almost 10% in some of the large cities. So we are seeing, another phenomenon coming up here. So in my opinion, I think that the solution will be very composite and it also has a time factor to it. So some things that we put to work for the next 1, 2, 3 months may be completely, out of rhythm. Well, for the months 4, 5, and 6, if the things don't fundamentally improve. So this is the question of incremental strain, and what we have to worry about is what breaks the camel's back. So being an optimist and being a CEO of a fintech company, what we are looking at is how do we provide flexibility. Now, if you have to relocate and move to a new building, can we help you not having to come up with 3 months worth of rent, which is $9K or $10K? Instead, can you just spend $200 a year and give the security deposit alternatives? So that's one way of creating flexibility. The other way is, okay, instead of trying to borrow on your credit card, could you utilize our partner's line of credit? Would you qualify for it, yes or no? That's another way of doing it. Keeping control and kind of leveling the need for financial literacy is going to be key. It's the fintech's responsibility, I believe, to make it easy for people to know the facilities and how to maintain their score and how to get through these issues. So creating intuitive user experiences on the fintech platform is going to be important so that we can level the field so that this multi-generational population with very varied circumstances, education levels, level of tech savviness are not kind of victimized because of who they are, and we level the playing field. I think that's a big thing for people to do. So I think this is one of those situations where, like I said, you're going to need a range of strategies, and they're all intertwined because there is a domino effect. I mean, if the record evictions go through, it increases disproportionately the homelessness and your government programs and support programs, costs are going to skyrocket. So the issue here is which of these issues should be tackled upstream to prevent the homelessness from happening, versus which are the ones you need to be reactive downstream to provide solutions. So we, as a fintech platform, are thinking about it and trying to figure out that leveling the field on financial literacy, providing viable options where people don't have to put up cash, and you give them alternatives. So the risk profile does not change. However, the cash out of pocket does change, because in most of these situations, it's a cycle, and all people need is to get through this tough period, and they will have a second chance at life. And we have to make sure that this financial spiral does not completely consume them and affect them disproportionately. Does that make sense?
Yes. Karthik, do you work in Seattle?
I'm in San Diego, California.
No, I'm asking, does the company have a portfolio of properties in Seattle?
So we have most of our customers are in California and New York, but we are operational in 400 cities. We are expanding in that market here.
So there's a reason why I'm asking you about Seattle. Jeff Bezos has committed some significant amount of money to prevent homelessness or to address homelessness in Seattle, which I imagine I imagine that is something that is being tapped into in Seattle to deal with their situation. All the things that you have described, I think they actually have access to some resources to be able to deal with it. And I guess let me finish the question. The question I'm asking is that a model that can be scaled throughout the country, and especially given the size of and scale of the fortune that Jeff Bezos is sitting on, is that something that can be tapped into to bring some relief to this category through FinTech?
Absolutely. I think this is a time where compassion comes first. And I think it's time for everybody to kind of do their bit to keep the community together. Imagine a lot of these people who will become homeless are also clients of Amazon. So that's how intertwined the society is, and that's also the bane for small and medium businesses. A lot of the people whom they employ are also their customers. That's part of the community. So I absolutely agree with you that it's public-private partnerships, governments rethinking the whole system, large financial institutions kind of going back to the drawing board, figuring out what the metrics should be But I think that the fintechs could be a very compelling force here to kind of really accelerate, be a catalyst, and really level the playing field. And I think, think of these large institutions and establishments as system of record. They collect record. They do a lot of work. The fintechs can become very effective systems of engagement. And they can collect real-time data, find effective ways of sharing the pain, and also partner increasingly with these large institutions, with governments, with individuals, with nonprofits to figure out a solution because the need of the hour is compassion.
So have you talked to Amazon? Have you talked to Bezos and his fund, whatever his vehicle is for doing this kind of work?
I have not, but this is definitely number one on my agenda. Thank you for bringing it to my attention.
Good. This may be the solution, actually, because there's, right now 5 people have $1 trillion net worth. The combination of 5 individuals is $1 trillion worth of capital. That's Jeff Bezos, Bill Gates, Mark Zuckerberg, Bernard Arnault, and Elon Musk. Of these people, Bezos has indicated, he has signaled that he is interested in tackling homelessness. There couldn't be a more urgent problem given COVID. There couldn't be a more urgent time to address homelessness. So this may be something that you need to follow up on and tie, connect the dots and bring this infrastructure together to tackle homeless at a national scale, not just Seattle, but at a national scale, to get through the next 18 months to 24 months.
Absolutely agree with you. Couldn't agree more. I think that the timing is right, and this is a time where I think this is life and death for a lot of the hardworking American families, because financial freedom is very, very important. But also, you should not be in a position to have to make difficult choices like do you pay your rent and keep a roof on your family, or really feed your family, or take care of health care. So definitely a very dire situation, and it's also in many ways uncharted. So, yes, absolutely, all hands on deck.
It's also a tremendous opportunity for Bezos to put his fortune to work. He has benefited from COVID, so you should, you try to see if you can connect the dots and give him a technology-enabled vehicle to basically add value by the click of a button, so to speak. This is why FinTech is very helpful, because, you can't just sit there without an infrastructure like what you are offering and be able to touch all these people. You have to find all these people, understand their rental situations, understand their eviction threats and all of that, but you can provide all of that at the click of a button and be able to figure out exactly, here are the 1 million people who are under threat of being evicted, and here's how long they need to be provided relief for, etc. You have all that data, and you have the ability to make this thing happen. So it would be great if you can make it happen.
Srimana, that's a fantastic point, because at the beginning of the call, I laid out what we do, which is around 240 plus very large landlords across North America, representing 250,000 units on the platform. We also have quite a bit of data and history around 8 years of processing, billions in rent and so on. The other thing we have done, to your point of making it simple for people to access these services, we have made a portable version of our platform, and we have approached other property management and real estate companies to kind of white label our solution, because distribution is everything. I'm happy to share with you the last 2 months we've signed 3 major deals with the property management companies. The prominent one is with the Apartment Owners Association of California, where we are white labeling our solution for payments and allowing them, and they have 40,000 landlords in their membership profile with 240,000 units under management. So you're right. I think that the knowledge that we bring in terms of the renter and the landlord situation makes us very valuable for partners like Jeff Bezos and others who want to just kind of step up and help the community. I think we can help accelerate that very quickly.
Great. Well, if you gain traction with Bezos and or Amazon, and if something happens, could you please shoot me an email and let me know what's happening?
Absolutely. I will absolutely keep you in the loop, and we'll share updates with you as they come.
Thank you. I wish you all the best.
Thank you, Simona.
Take care. Bye.
Bye.